Hello, how you going there, guys? As soon as I was talking to myself there for a couple of minutes, um, let me know if you can hear me loud and clear. I'm pretty sure I'm coming through clearly now. How are you, Lauren? Paul, how you going, mate? You should be able to hear me now. I'm assuming anyway. Good work. Um, Ali, I was having a bit of a stretch. Got myself my third coffee for the day, so ready and raring to go. I hope we all had a good weekend. I know myself didn't get up to too much. I think Paul, you were thinking Paul was travelling a bit, so he's out and about. I see he's back now, back at the office. Well, back at the home office, I'm guessing, if you're anything like me. Um, Anyone that's new, welcome to Trade Setup. It's the 30th, so 30th of July. One more day to the end of the month. Was it tomorrow's the 31st and the first on Wednesday? So, welcome to all new traders in here, up north visiting relatives. Oh, beautiful. Yeah, like I say, welcome. Welcome to Trade Setup for anyone that's new. Top left-hand corner, you'll see us on Twitter. Top right is our Facebook feed, and the bottom right, probably the most important, is just to subscribe to us at YouTube at what is that? What I think you call it your handle at Trade Setup Capital AU. So yeah, feel free to join us in there, and that way you get a notification anytime we do go live on YouTube or we put out anything at all. Just remember the general advice warning right in front of you. I'm sure anyone that's been here for a while has heard me say that quite a few times now. So sorry to keep repeating, but rules and regulations, you know how it is. Now, today, I don't have, like I said, I don't have much to talk about in the way of planned material. Occasionally, I think of something over the few days or a week and think that's a good topic just to chat about. Not much to chat about today. I think we'll just continue on with the market, um, where it's at, what it's doing in the US, what happened overnight in the US or on Friday night anyway, um, and what we're doing today. Obviously, anyone that's watching it, we're down about that 30 point mark, which was expected after Friday's pretty much the SPY. Anyone that looks at the SPY closed, I think, Thursday morning. We rallied hard Friday, so the SPY was up and then pretty much straight back down the close of Saturday to where it started on Thursday, where it started on Friday morning. So pretty much giving up the gains that we made, or the bulk of the gains that we made from Friday, which is a bit of a shame. It is a bit of a choppy session, and it's hard to, like what we've spoken about a few times, it's hard to really pick some consistent movers. There are some that obviously will take off on what I'm finding anyway. They're not as clear cut, the entries for me. When I look at some that have gone on quite well, seem to go on, you hold your profits and you just sit there, they can sit there doing nothing. Because I think the overall market's capped, we're sort of capped with what the US is doing. The US is capped with any sort of trade wars and issues they've got with China still getting worked out. So that's sort of capping their market, even though their economy is doing quite strong. I think there's a lot of things I've read that, or people are saying, analysts are saying, would be a lot further ahead in the US if we didn't have these headwinds of trade wars and tariffs. Um, but yeah, that's something we've got to deal with. That's the market. Now our market's still grinding higher. Let's get it up right now. Let's get rid of that. Let's change that. Should the change the screen there, you'll see. And let's just get a look at where the markets are. I haven't changed this for a few days. What's that? SUL. So the S&P, that's the weekly. S&P was obviously down, but that's just giving up a little bit of that heat. We said it was getting a bit extended. It has been pretty much the most of this month, a good part of this month. Coming to the end of the month, it's just had a bit of a pullback on Friday, which is kind of good. I mean, you can see the Dow. Anyone that watched it, the Dow didn't have really that big a move down, whereas the S&P did. The broader market was down, and the Nasdaq was down even more. It was down nearly 1.5%, whereas the others were down about 0.34%. I think 0.6 on the S&P. So there's a bit of a mixed bag. The US had some reporting out on the Nasdaq anyway for tech stocks. Some of them missed. They were disappointing earnings, although they're quite positive. They're still disappointing from expectations point of view, which meant that they got sold off, and that's dragged the Nasdaq down, probably overshooting the mark a bit on the overall market. Um, and there's still those headwinds of, like I said, tariffs. It hasn't. People are going to start to focus back in on it because it's been quite quiet for a while. They've had, was it the EU, Trump, and I don't know, the EU representative that comes to some sort of deal with tariffs. They're going to hold off. US are going to hold off on tariffs on the auto industry over in the EU. And I saw something pop up about BMW are going to raise tariffs on exports to, I think, Asia or China. So they might be playing the game as well, joining in the fray. So either way, tariffs are going to be coming back online. I'd assume the focus is going to shift back onto them. The growth is still going along nicely in the US. You've got reporting season kicking off. I don't know, we're probably about halfway thereabouts. Quite a bit that's reported. Um, and they're showing, as expected, the earnings season's quite strong. Um, but like we said quite a few times now, it's not about what's happening now. It's about what's happening in the future. And if there are going to be tariffs, yeah, that's going to crimp a lot of growth. If there's not, then you might see this market. If something gets sorted out, I think it's just a shock to the upside. If something does get sorted out between China and the US, and there comes some sort of arrangement, I wouldn't expect that's going to be anytime soon. Anyway, it's got a few weeks to play out before I think another 200 billion that is getting tariffed, and potentially up to 500, which is pretty much everything they import. The US imports from China potentially getting tariffed or taxed. Well, not taxed, is it? It's tariffs. Um, so yeah, there could be still a bit to play out. So I wouldn't expect it. It might be just after earnings season. The earnings season just finishes, and then the market's been held down. It's been capped quite a bit, and then they come out and they have come to some sort of arrangement. This is pretty good, and then or you would expect maybe a bit of a shock to the upside as the market plays catch up in the US a bit, and that could see it trade up to the highs on the Dow, which is we got another 1,000 points up, which is it could be done in a couple of sessions, but yeah, I don't see. Whereas a shock to the downside, I think it's going to be more of a it'd be interesting to see if they do come out and there's that argy-bargy. A lot of people are capping any sort of buying on a stronger economy because of that. So it'd be interesting to see how that plays out if they do get a bit further down the track with more tariffs. I would expect some selling pressure coming in if they do impose, and was it 200 billion of taxes, or the US do anyway, of tariffs. But either way, that's the US. I mean, that's what's going to play out in our market as well, whether we like it or not. What's happening over in the US. So especially if there's a shock to the upside or downside, that's going to drag us along with it, whether it's up or down. Especially if there are tariffs, it's probably going to hurt us a bit more with our ties to China and some of the commodities. So it's a Dow. We've got FTSE still looking pretty much the same. It's holding daily high lows only slightly. The last few days, it's holding up there quite nicely. We're looking up, sort of potentially pushing up through that 77.50. I think again, it's just got it's getting capped by what's happening overseas in the US anyway. Europe's been a bit more positive. The DAX has because of tariffs or what they've talked about with the US holding back anyway. Get rid of all this. What do we got there? That's the dailies. That weekly doesn't look too bad on the DAX. I kind of like that high low in there. It's still got lower highs as well, so it's coming into that point of agreement again. It could all just be about time, waiting and biding its time until everything gets sorted out. Maybe the EU is looking a little bit better if they can come to more of a decent arrangement with the US. Although soybeans is a big thing, obviously importing soybeans. They're meant to be buying a whole lot of soybeans from the US, but they haven't really. No one's come to some sort of arrangement of how many. So even that euphoria might get capped a bit. And I think all the US farmers are rushing to get it out before the tariffs are imposed or potential tariffs are imposed. So I find that so pretty funny actually. I didn't realize that they're the second largest exporter of soybeans, the US are. So it's a bit of a tidbit for you if you didn't know that. I tend to lag on a lot of things like that, a lot of fundamental things like that. The XJO, that to me is looking a lot better. I mean, you're getting this sort of cup formation. It did tag 6,300 on Friday and then backed off from there. Well, we're backing off today anyway. But that daily chart, and you can see with what I like to see in the stochastics is that's going from sort of that overbought mark, it's edging lower to around that 40% mark. Yet we're not we're not backing off. And this, when we did touch up on that overbought market initially, that was when we traded up to say 62.50, backed off, built a high low, kicked on a bit, and that was a bit of divergence there. So any of you bears may have seen that. And that would have dragged in a bit of selling, but it's holding up. It's holding up at 62, and that's a high low compared to say 61.75, 61.50 zone. This zone here. What else I draw it up? So I do like that. Here we go. Probably drawn it on the chart. So we've got a high low just in here, and we're holding this 63, 62, sorry. Quite important. I think we're getting right up at that 63 zone. So if we can keep holding these higher lows and the market can sort of curve up, we're getting this sort of cup formation, and I'd like to see it maybe press up, pull back, and you're getting this type of action. And sooner or later, that's going to accelerate. You would expect to accelerate on. And we're still looking at longer term to start creeping up to the all-time highs on the ASX. So you can see, like I said, this is, whoop, I'll take that back. I'll get back to my straight lines. I'm not very good with that. You can see that's holding down, and what it's doing is taking a bit of heat out of this buying. Sellers are coming in, but buyers are still continuing to set up. So sooner or later, that's going to get, the seller's going to clear the way, and you probably get that buying pressure really kick on. Again, it just depends what's going to happen over in the US. Some bad news out or something, untoward on tariffs, or Trump has another rant on Twitter, then that could see us pull down. But it's going to be interesting if that does happen, whether we're going to hold up around that 62 mark. We're about 65 points off there, so we can easily just chop in around 62 to 63 for quite a while yet. That longer term trend, as you can see, is still that's still holding quite nicely. Well, this leg up is anyway, it's holding up quite nicely. So you can see that could lead to just chopping around for a few days yet, a few weeks yet, and still hold this trend up. And then sooner or later, it's either going to break up or start to get some further selling pressure. But even if that takes a few weeks, we're going to find out more on what's happening on tariffs. And then we'll just have a clearer picture. So that's it for the XJ. Nikkei, still okay. Actually, this is something, just this area to be looking at here. We've got clear resistance through 23,000. What's the weekly showing? Clear resistance through there. Okay, we had that initial push up, pull back, build a higher low at 22, touched on 23, couldn't get through, deeper correction, touch back up there, couldn't get through a third time. So this could lead to a lower high on the Nikkei. Just be careful of that. And if we do trade down and take out those lows at 22,340 thereabouts, roll over here, we've got a lower high, that could lead us down to 21.5 on the Nikkei. So potentially a bit of pressure in there if you trade it. If not, you'd want it to just trade up through 23 on this fourth go through. Otherwise, I'll be thinking twice about being a bull on the Nikkei. Hang Seng, still don't mind. Nothing's really changed on the weekly charts anyway. And you can see this 1-2 moves down, taking a lot of heat out of the buying. That buying up that really accelerated up to near 34,000. A lot of heat's come out of that move. If it doesn't hold up here, we'll have to keep an eye on that, but I still think that trend is looking quite good. You can take it across the lows, low. It's probably going to take you into about that 28,000. Let's just draw it up to confirm. Yep, so still technically holding. I mean, it's looking good on that weekly. Still holding at 1-2 moves down. We're getting back to the zero line on the MACD. Not that I look at it a lot, but I just noticed it then because I had it up. You can see that it can revert back to the zero line here and start to lift again and start to get some positive momentum. It's getting a bit ahead of itself, but still we're in a nice little zone on the, you can see here on the stochastics where selling pressure's taking it lower, still holding this long-term trend up. So I'd be watching those shorter time frame, and it's looking like through 29 that was a bit of a move down, bounce off 28, got to 29 here, pushed back down, just washed out the lows, and we pushed back up and cleaned out that 29 zone. Only, what was that, on Friday? Cleared it out. So the daily's looking like it's showing early, very early signs of potentially holding up at 28,000. So we'll see how that goes moving forward. So that's probably all enough to look at there. Just trying to think of, I just wouldn't mind just having a bit of a look at crude oil. Is anyone trading crude oil? Probably not much to look at copper. we've looked at copper before. Let me go back to the daily. I mean, copper being a bit of a, what is it, barometer for what's happening with the trade issues. Get rid of that, go away. You can see we had this move up. It was holding that trend up here until we got chopped around here. First sign that something you don't want to see is starting to happen. Bit of a press up into that resistance zone at 331. And then pretty much this has been driven by a few things, but I think mainly tariffs and the argy-bargy between the US and China. Big sell-off, so it's broken a key level through that 291, 292. So from here, it's whether, are we going to find another bid zone potentially down here, or is this thing just going to continue back down to the support zone around $2? I think that's a long way to fall, especially if they start to play out. There's been quite a bit of heavy selling in there of late. Let me just get rid of that. Shouldn't be there. So with respect to what's happening with trade wars and tariffs, copper's not saying too much apart from no one wants to buy it just at the moment. So it's not a big story there, but it's worth just keeping an eye on copper prices. If copper starts to lift and you're not seeing too much news, there is potential that something's coming. Looking for price to give you a bit of a heads up of what potentially is going to happen in the news. Or it's, if we just chop around here and hold these support zones, doesn't mean too much. You want to start to see it lift and see that opportunistic buying start to lift up. This may take some time to play out. This is a daily chart here. What else is it? Just going to look at copper, crude. I thought we'll have a look at crude. I've read. It's where it gets a bit of a problem. I think we'll just touch on. I don't know who also reads a lot of news. I mean, I read bits and pieces, but sometimes you see, I just, like on the weekend, just reading about crude. One was saying why crude's going to collapse. And typical Bloomberg article. I mean, Bloomberg are not interested in anything. Sometimes they don't even care whether the news is right or wrong. As long as you read it, that's all they care about. They get some eyes on their articles. So sometimes Bloomberg, the stuff that comes out there, yeah, I'm not a massive fan of it. So, but just filtering around on different articles, one I think on Bloomberg was saying very bearish on crude. It could collapse, $45 a barrel or $47 a barrel. Here's why. And then something else saying why is crude going up? $100 a barrel or whatever. So they're two completely conflicting views. So that's why, I mean, it's good to read it and read their opinion and go, oh, that doesn't make much sense at all to me. Okay, you can forget about it. But I'm always looking at the charts to see what the charts is telling me. That's on your daily chart. Let's just look at the weekly. I mean, this trend is definitely up. The longer term, what I do like, we've had this big move up. That was the best time. A lot of good trades through that run up there on crude, but then I got nabbed a couple of times on the way down. Did quite well here, so it's been quite well. Crude's been good to me in the past. But what we're seeing, that big move up, that big blow off when we hit nearly $150 a barrel, big sell off through the GFC. And then it obviously rebounded back up to around that 110, chopped around up here, big sell-off, but it's really just washed out the previous lows at around that $30 a barrel, or that zone in there. When we got this washout and it's retraced off here. So whether or not we're just coming in to sort of this support zone, was support, now resistance potentially, or they're just going to keep grinding higher. I think the weekly is a bit harder. So a lot of those fundamentals have changed since then. Supply demand fundamentals, I think there is talk of potentially the glut they had in inventories on oil is slowly, whether or not it's getting worked through, which would increase, with demand potentially increasing and supply decreasing, you should see higher prices. And that's the reason why we've had these good little push up in crude. And also Saudi being, you've got the US that wants supply down, and obviously demand stays the same. They want supply down to kick up prices. Well, they want the reverse, and Saudi have got the ability to do that. Pump out more, or they just cut the pumps, reduce the output, and then you're going to see that change in price. But either way, I think crude, it's even on the daily trend, it's still holding. It's holding the trend high. Got a bit ahead of itself with that push up to 75. Had a good little pullback, but you can see these reactions just at the moment. You've got high low here, potentially. That's a major high low with this level. So we're really just trying to see whether this major high low we've got press up, pull back, built a high low, press up, took out the most recent highs, and that was only took it out mildly between around 70 to 80, pressed up through here into obviously a key resistance zone, pull back. Sorry, just get rid of that phone call. Had a bit of a pullback, so we're really interested to see whether this is going to be another high low. I mean, you've got a few factors which are working against it. You've got a few lower highs just in here, and this is a potential. It's not a confirmed high, lower high just yet. Don't want that. Just in here, but you can see that price is contracting. You've got high lows, lower highs pressing in, and sooner or later this is either going to curve up and take out the highs. Then you've got a new major higher low, which would lead to higher prices. Obviously, a push back up to 74 or 75, or there's going to be some more selling pressure. It's going to push down through 67, and then it's going to come straight into that anchor level at 64 again anyway. But I think it's quite a longer term trend, this uptrend here. So I'd expect this to hold and press back up to 75, at least test up into that 75, 76, into this major resistance zone, like we said just before, around 76 or so. But we'll see. I thought it was worth just looking at crude. We've got oh, I just dropped out. Just let me know if I dropped out, guys. Anyone? Can anyone still see me? Is it still coming through okay? Just refreshing that. All right, so we should be seeing me okay now, but we'll see. Yep. Right, so that was crude. Won't really look at the Aussie. Let's have a quick look at the Aussie just to see. And if you've got anything you want to look at, just whack it into the chat. Is it dropping out there, Ellie? All right. The good old fashioned intermittent internet. That's what we get out here. Yeah, sorry about this, guys. If it is dropping out, it should just be buffering. It shouldn't be. Well, it shouldn't be buffering, but I can see that it is occasionally. We'll just bear with us. Hopefully we can get that sorted. Just keep an eye on it now. All right, so we've got a couple. I'm going to whack up a couple as well. I thought let's just have a quick look at the Aussie to see what that's doing. It's looking a bit negative, to be honest, on this daily chart. You see the prime market's pressed down. We've got a potentially a major support zone through here. Just give me a second there. Draw that correctly. So that's more of a major support zone. That's from that move down. We've had a good press down into that. It was around 68. Bounce back up. It's great. It was only really grinding higher. So that price action longer term is not looking too bullish. So it's really just here. It's really just all about the US dollar. I mean, the US dollar you'd expect to be edging higher. They're lifting rates, but again, that can always. The longer term view is obviously the US dollar heading higher. The US dollar heading higher, and obviously putting a lot of pressure on the Aussie. And that's because of them raising rates. But then you got this raising rates. If there is a big trade war and it kicks off, that's going to crimp growth. You may not have to raise rates as much, so we might get a bit of a pop in the Aussie. Again, it's all coming down to the US dollar and what's happening over in the US. And again, the Aussie dollar rates is going to affect what's happening over here too, especially with exporters and importers as well. But all right, anyone's got business overseas, offshore. Let me just minimize that. So, but with the Aussie, it's got this support zone here. It's whether or not we just have this bit of a bounce. I'm looking at the daily. The shorter term timeframes don't look as negative. I would suggest maybe we get this bit of a pop up. We might get a push back up to 75 thereabouts. But either way, the trend down is holding longer term, and we're down in a key support zone. So we just might be chopping around here until we get more of a better outlook on the US dollar. All right, let's get back into our shares. Let me delete that. Good old break and keep going, fella. All right, so we got how's that coffee? I hope you can't hear that too much. It is nice though. Sorry about that, guys. Thanks. Thanks, Lauren, for teasing, mate. I didn't realise it was probably coming through too clear. Um, alrighty, buffering again. So first one we'll first cover through. Oh, firstly, I just got a couple I want to have a bit of a touch on. These are a few that I've just been having a bit of a look through today. Some smallies here, and then there's a couple of others that we've been looking at for a while. So I do like, um, all right. So we've got, this is tungsten mining TGN. It's only traded 150 grand at the moment, and it has picked up just the last couple of days. Bit of volume. It's obviously a small volume, so it's not going to suit everyone, but it just looks like it could have a bit of potential there. You can see the market's pressed up a lot of time through here, consolidating, good part of what, 6 months or so. 1, 2, 3, 4, 5, 6, 6. Beautiful high low here on the, we're on the daily here. Beautiful high low that's pressed up, and if you took a trade through those highs at 21.5, that would have been great. Pressed up, and we had a lot of the heat come out of the market again. You can see that the retracements too have been quite, not, they've been shallower, as in that's probably about a 30 to 40% retracement of this move up. This one here probably very similar, and it's harder to see, I guess. 30% retracement here, then it pressed on. We've had a deeper correction here this year, and we pressed off those highs at 80 cents. But it's just these last few days we're showing a few signs. And the weekly chart, look at the weekly chart, we're well and truly in that oversold zone and potentially above 40. And 40 is the anchor for me on the weekly. Well, just below 40 is 38. That's the anchor there for this move up. We've come right back again, but there's nothing to say we can't get a good little trade up. Even if we go and build a major lower high, 70 to 75, there could potentially be 34% gain in that one. If it sets up, for me, it's not setting up just yet. And I don't like these two rejection candles. I'd like to see it potentially retest this low, maybe wash out and reject straight away, and then start to build, start to form a clearer level. It's going to break through off a higher low, and then this contraction low, we're starting to get that buying pressure back in, and then from there, just managing where it's heading to, whether it's going to head up, break 80 into new highs again, or whether it's going to maybe potentially build a lower high. But I don't mind that chart at all. It's looking quite good. Probably the weekly's in a good zone, so it may take a bit of time to play out, but it could be worthwhile just keep an eye on. FPH. Fisher and Paykel, look at it's the weekly. The weekly trend's it's been trending high for quite a while. Had this big press up, bit of a pullback into the end of 2016. Another good leg up. We've had a correction since the start of this year. It pressed up into the end of last year, and then you can see this choppy action pretty much contained between $13 and just above 11 through here. It's clear on the daily. Get that. Let me just see that weekly again. So the weekly it's extended up through 14, backing off, but it's these, you can see it's a similar type of price action, a couple of down days, maybe you get a pop up. Something to keep an eye on, but I definitely think it's going to, at some stage, it's going to pull back and build a higher low, and it might give us an opportunity. Whether it's just now, and this could lead us to this little move back down, could be something like this little move down, back to the MAs, little pop up, double top, deeper correction. But I wouldn't suggest we're going to get a deep correction like this because we're just coming out of one. Right, so I've just got my eye on this for potentially, that reversion to the mean. Maybe the MAs catch up here, and then bang, up we go. We take out 14. We continue potentially over the longer term to 15 or so. May not be a big gainer, but it's definitely in an uptrend on the weekly. We just had a good correction, a good part of this year. Like I said, holding between 13 and 11, chopped around. Nice price action here where it just went sideways, smack in the middle, pretty much around 12 before it started lifting. So that's confirmed higher low. Once we're breaking up through that 13 mark, harder to take a trade through there, but you could have easily had a nice little trade through here. You can see that range, and that's because it's holding that range through there, 13 and 14. You can see it just chopping around. It didn't really do anything significant, as in it was just banging around between highs and lows until we had this big sell-off, popped straight back up again. So that the severity of the sell-off, you can see day after day, boom, from 13 down to 12, held up there, popped up just as hard, but only over a couple of days, and then it spent the next month pretty much consolidated around above and below 12. That little washout on the green candle is opened down, cleaned out these few lows with a washout, and then finished positive for the day. Good little sign. If you bought that on the break there, okay, you're going to be obviously focused on the 13 mark, probably on this day, focused on the 13 mark just to see what you do with your risk. But then the following day, bang, straight up and through. And then you could just sort of forget it. It's broken that 13. It's going to drag in more buyers and up she goes. So that would have been a nice trade through there. But from here, it's more just seeing, I think you might be up against it a bit. I don't like this sort of, I don't like coming up against a resistance zone where, we said it before, the market's moved up, had a pullback, touched on it again, pulled back, and you're looking for an entry like that, and it could just fall short as soon as you get up to this resistance through here. You can trade. Hello. Seems I'm having problems with my earphones now too. But yeah, that dragging the process is coming down. With this entry here, this is what we might be up against just up here, but I'd like to see it consolidate through potentially 1360 and 1320. I want to see this level hold at around 1320 to 30, this support zone through here, hold, and then see if we can lift from there. There's something to keep an eye on, and that's because this is the first sort of correction we've had since breaking through that 13 mark, correcting. Like I said, I wouldn't expect it to be a major macro correction like this price action. I expect to pull back and then up should go a secondary leg. And that secondary leg could be, I'll change colors, taking it as that's your first leg up, potentially your first leg up if you take that from here, especially if it is a shallow pullback. So that's your leg up, that's a shallow pullback. That may only be 30% retracement of that leg up. And if you can take it from the lows, that projects it quite high. And it could be worthwhile just keep an eye on that, or nice continuation of that longer term uptrend. Now, that was one. There's a few, got a couple here. RMS is something we've got an eye on, we've had an eye on for a while. You see that market's lifted pretty much in the last few years, lifted up, start of 2017, where we backed off, took out the anchor level, and that was only through, I'll draw it up. It's from Milius. I do like my resources. So that was your anchor level at the time. So we blew through that. That was that leg down. Took out the lows, popped up, deeper correction. But this move through support here was only really a minor move through because it comes from such high levels up at 75 cents. Then this move through here, that low, really again the same sort of thing before we started lifting here. And you can see all this price action playing out quite nicely. And this chop around here was quite good. That was holding up near the highs, holding up near resistance. So taking an entry in there would have been well and truly worthwhile. Then you had this secondary leg up, another move up here, which is good. And what we've had since then is really some decent correction and really in two moves, which I like to see. And this is on your weekly chart. And we're getting into that oversold zone. So what we've done is corrected this leg up. We're still holding above that sort of breakout zone above 50. We're going from overbought to oversold. So a lot of pressure from sellers trying to push it down. ORG, no worries, look at that, John. So the market's trying to pressure, the sellers are trying to pressure the buyers, but the buyers are soaking up quite nicely. And all that pressure from the sellers to go from overbought to oversold, down around that 20% mark on the stochastics, is getting soaked up quite nicely. So you'd expect it eventually to start lifting. And it's really just, from here, I've just got my eye on this one for, just draw it up. Sorry, guys. With this move here. Sorry, just having a sip of coffee. Didn't want you to hear that one there, Lauren. So you can see that's been a good move down, pop back up, and it started to build that that we call it contraction off the highs. And you've had that secondary move down with this capitulation here, bit of capitulation there. fell short of 50, so it's doing quite well. And if you really technically, this was the anchor. I'll draw it straight through here. This level here around 51 is the anchor. So you've had move up, sort of chopping around sideways, but holding higher lows the whole time. These are minor higher lows up, bit of a pullback. This is more of a major higher low on that daily trend up. And that led to this move up here. And it really didn't look back to that. And we just contracted off those highs, but still technically, once we're holding that 51 zone, it's still technically holding that uptrend of this move up. It is cleaning out a lot of traders, and that's good to see this type of price action because it's still quite positive. You might get a few people in here thinking, oh, it's rolling over, it's negative, but technically until it breaks that anchor, I'm still quite keen on it. And what I'd be looking for here, I wouldn't mind seeing it pop out and then pulling back, pop out, pull back to build your high low, and then looking for the entry. But if we've got that sort of 57 zone as a line in the sand, if we could just start doing this and holding it and then breaking up as we come out of contraction, and you can buy it up through 57, but I want to see still buy a higher low. I don't mind buying it after a higher low as long as it's coming out of contraction. I don't like to see buying off a higher low when your contraction is still low. So that's your key sort of contraction resistance zone coming down. You buy it off your higher low, but it hasn't broken out yet. I don't like to do that because that's where you can get caught and it can retrace on you, boom, straight back down again. I would rather buy it. Ideally, this was, sorry, one step back. Ideally, this is what I'd like to see. That's your contraction low. It's broken up, pulls back, builds your high low, and then go. But this still just as good. That's probably sometimes it may not go as far, but it's still coming out of contraction. You still got your high low off potentially that longer term 50 zone. You still got your high low here. That's the same sort of thing here. Higher low, higher low. You're still working off a higher low, which is good evidence that buyers are stepping up and are looking to take that price higher. And that contraction's broken. So that sort of the most recent down move from 65 is broken. Once you start coming out of here, it's going to perk the attention of a lot of people, especially obviously your technical analysts. Perk their attention, saying, hang on a sec, it's contracted lower. We held up a key level at 51. We built a higher low. We're starting to come back out again. It's worth a buy for a new leg up. And you're just anticipating taking advantage of that, a next strong leg up that's going to, will technically or theoretically should take you up through the highs at 61. You bought it nice and early, the start of a trend. If it does hit the highs at 61 and you get a double top, okay, we're up something. We can minimize our losses or pretty much lock in a very small gain and call it a day and just reassess it from there. But if it doesn't, if it just goes straight on without it, you're going to get buys, breaks here. There's going to be those longer term buyers that might buy it on a break of 65 at 66, stop potentially way down here at 50. So what you're doing there is really just minimizing your risk and trying to use whether you've done your back testing on your different charts. I mean, this is what I look for, and this is why, because it's a risk base. So when you see these setups, probability to me says that we're going to get a break up through 61. Even if it just flushes out 61, if it pops up through and reverses, I'm not going to get hurt too much. But generally, when you get price action like this contraction lower, and it starts to break out like this or like this, I'll draw that up. When you get a breakout like that or entry like that, off a high low, that leads to attacking the most recent major high. So not 9 times out of 10, but probably 6 or 7 times out of 10, that's what will happen. So the reason why I like to look at it, things like this off your high lows here is that I'm minimizing my risk. I'm not going to buy it on a breakout of 65 when it's a lot more confirmation. Technically, I should have my stop down at 50. To me, that's way too much risk to take on it, because if you just get stopped in at 66 because it's just washed out the highs, then you get the lower high build, you're going to take quite a big hit on that. So that's why I like these type of setups anyway. Okay, getting sidetracked. Now, I've got a few others on the list, but we might just go through what you put up so far. IEL. Any questions on just what we're saying there, guys? IEL, I'm not a massive fan, and I know we were talking about this before, weren't we? Might have spent some time on this last week, especially now. It's easy to say today. It's not too handy, down 2.5%. Doesn't mean too much. It could just be retest intent and then lift. Okay, then it could be a buy. But it's more the longer term charts. to me, this is going to take 2 legs to clear out a lot of these late buyers, and because of this longer term chart. You can see that the market's lifting, the MAs are still spreading, as in when we say spreading, the distance between the two, the 20 and the 50 here is a lot less than it is up here. So that trend is up, it's starting to get a bit stronger, but the actual price is probably getting a bit ahead of itself. And again, it's the reason why I wouldn't buy it is mainly based on that reversion to the mean. I mean, anyone that's heard us talking about that before, is coming back to the MAs. It comes back to the MAs here. Well, let me draw that. You've got reversion to the mean here, potentially here, 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 well, sort of here, but here you can see we're actually quite a way away now from that 20 EMA. So that's why I'm expecting longer term just a secondary move down 1, 2, 3, back to the MAs, and then potentially lifting from there. So that's why I'd be happy to hold off on this one. Still think that that longer term trend is well and truly entrenched. This leg up here probably needs a bit more heat to be taken out of it, as opposed to just what we've seen on the daily. Stochastics are overbought. There's too many signals for me just to steer clear of this just for a minute. And if I was going to buy it here, I don't even see the setup. There was no real setup apart from maybe on this move on Friday. And you'll see this bit bigger. Maybe it's here. What I'm saying, that move up through here, through this high of 1022, 1025, 1022. So, and you can see before last time it broke, this is 1022 high here. I'll draw it up. It might be easier to see. I didn't like the fact that you've got a clear sort of resistance zone up here. It's starting to lift, pull back here. Okay, that's all good. It's holding this zone through here. Then I think it was in this candle, it popped up through, hit 1025 in this candle. And look at that candle, pretty much turned around, opened up, traded, suckered a few people in, reversed. They're probably getting a bit nervous here that it was going to break down. Did lift up here. And again, it was more of a sucking a few more people in. So that's why I don't like it, especially after today's candle. That's why I'm expecting more of this secondary move down. And then to resume that trend up. Who knows where it's going to go to? Hazarding a guess from 11 down to about 9, $2. If you take that from 1040, that takes you to 840, potentially somewhere down here. Am I right? Wrong? 11 down to 9 is $2. 1040 is down to 840. Yeah, somewhere around here. Or they're about 8, so just say 860. So we could be, if this is a secondary leg lower, we could be rolling into that, rolling over down and pushing down to sort of the 860 zone. Then you get your weekly longer term trend starting to hold, deeper correction. It's washed out a few of these late buyers, and then we start to build again. So that's why I don't like that one as such. CGC. I think there's a few other things you could probably throw your money at that one. CGC on the weekly, whereas this has probably done a lot of that reversion to the mean. You can see the difference between this is the weekly as well, whereas the other one was quite a way away from the MAs on the weekly. IEL. This one's had a couple of good, well, it accelerated up to $9. Bang, next couple of weeks, straight back down to the average, which is your MAs. Your exponential moving average is the one I use. The ones I use. There you go. Good reversion to the mean around that 750 mark, and potentially starting to lift. And you can see we're starting to lift from here. You can see we've gone from overbought to oversold, down towards that oversold zone, bouncing off the MAs potentially. I'll be just whipping down to the daily there, and yeah, we've got our eye on this one. I've got this on my chart. I haven't looked at it just before, and it might be had that big acceleration, big pullback. So that's a reversion to the mean on the daily. Pop up, pull back, retest. It's a minor double bottom. We're just starting to lift through this $8. I wouldn't buy it just yet on that breakthrough because this could easily be, we've come down. It's tried to go lower here at this stage, and we're about here. It could easily just be a deeper correction before we have this secondary move down, and then all bets are off. So where we could just pop up a bit more and then boom, straight down, take out that support zone. And that's what I'm talking, 1, It happens, we've spoken about this before, when you get up to a resistance zone, you have a good correction, you pop up, and we find selling back at that resistance zone, and then the market may have to build a lower high and have a deeper correction, take out this low before we start building again longer term and we start heading back up again. It just, if it can't get through the first time up here, generally a market, it's got to have a deeper pullback, clean out a few more buys, put them back on the sideline, put some of that fuel back on the sideline, ready to build again and get that secondary move up. So that's what technically can happen quite often, and it's the same, on the downside as well. It's found that a bit of buying support down around that 750 potentially here. So this is what, I mean, it hasn't played out yet, but this is what we're going to be careful of. So to negate that, again, I'm just going back to my high lows. To negate that, if I do get a pop up, I'd rather see something like this, then buying on the rise. This is your major, that's that line through here. That's your major pullback. You built a high low, and we didn't capitulate here. Buyers step in a bit earlier, back at around, say, 770, 780, 790. If they can step in earlier and prove to me that there's more than just myself is willing to buy it, then I'll be happy to buy that on the rise. And then you'd be looking up towards $9 and just seeing if it can blow up through $9 and continue that longer term weekly trend up. Does that make sense, just what we're talking about there? I hope so. But that's ideally what I'm planning for. Now, again, if I don't see it, I'd rather step aside. I'd rather step aside and just go, look, I'll look for something else that suits my mentality, suits my trading style, keeps me at ease without getting too angry with a few losses stacking up. So that's what I would be looking for. Now, does that make sense there, Lauren? I'll go to bin. Yeah, bin, yes and no. Longer term, no, there's not much data there. You pretty much got, that's all your data on a daily chart. Um, sorry, guys. Maybe someone else can grab that phone. Minimize that. Now, what do I want to do here? Discard. This is bingo. So what we're getting at, it was looking good here. You can see that's quite clear. Keep pulling back. You buy off a higher low, potentially in here. Up she goes. We're at a big rally. Pull back. And this is that washing out the highs, deeper correction, washed out that low, but held up quite nicely still. Then we popped up, pull back. We had to go at the highs here. So that's your high through around $3. Popped up, fell short there, deep correction, down to sort of this low. So it's good just marking up. I always like doing this type of thing on a chart because it's easier to see the story, potentially build that story in your head of what's happening. So for me, we popped up here, we had that little clean out of the lows. There's still quite a few bulls up there. The longer term trend is up. We've had this pullback. Okay, that's pretty much similar to most of the pullbacks in the past. Pullback here, rallied, couldn't get up to the high at $3, had to pull back, built a high low, tried to go up again. We only really touched, pretty much you built a lower high. It's a lower high in here at 295. It's a double top in there as well. So that's why we've got this deeper correction and we've cleaned out this high low at 255. Again, it's that if you can't get through the first time or even the second time, you're probably going to have to take a longer run up and have a deeper correction, a deeper pullback to put a few more traders on the sidelines, put them back in to build a new move up. So that's why we got this really that wash out of that low because there wasn't much distance between this low and 255, I think it was. We got this washout here, a clean out. The market has lifted again. We've lifted over a good couple of days. We've got up to that zone through there, 275. Friday was good. Okay, positive day, but today is not so good. Giving it up today, I don't quite like. And this is why I'll probably be a bit more tentative getting on the green candle, and we rejected it. So we traded through, say 275, but pretty much I think the close was till 276 close. That high was 276. So we closed right on the previous high here. Did break it, but then pulled back to close on it. I'd rather have seen a stronger close on Friday, a stronger close, and that would lead me to believe that potentially this is going to keep going up to these highs at 295. Instead, my concern is that, go back to drawing that, this could just potentially be a nice little resistance zone forming. We've got touched on here, washed it out here, opened up, rejected it today. So that, again, secondary rejection. So there is some selling for whatever reason here, and that's below this previous low, which is below, again, the highs at $3, the all-time highs at $3. So we could easily, and look where the stochastics are too, we're hovering around that overbought territory, around 80 to 90%. So one, if we used up a lot of the buying pressure just to get from these lows from 250 up to 275, we used up a lot of that buying pressure. Anyone that was willing to go has bought it right up there, brought it straight up to that resistance, or that potential zone that looks like it could be starting to build. They pressed it up there. So who's left to buy it and stop it from breaking potentially this low just at 268? Stop it breaking there and start to lift it. So this is why with this candle, I'm sort of more expecting it to take out this, and I would rather see, if you say this is the move, I'd rather see, let's just push that through there. I'd rather see a deeper correction and then start to build from here, a higher low of some sort, and then buy it on the lift from a deeper pullback above this level. It's holding up, so there's more people buying it, potentially at 260, wherever it may be. I'd rather see that price action in comparison to this higher low or this level here. Then to me, that's more confirmed. This is a washout of the previous low. We've had to put a lot of these buys through here. I'll draw it up here. A lot of these buys you can see through here. People that bought it, every time they bought it on the dip, they bought it on the dip, they bought it on the dip. They've been cleaned out potentially here. If they haven't, maybe they get cleaned out with this move here. The buyers step in, some extra buyers step back in at a higher low to this level 250 and start to lift it. And then I'll be more confident in getting in. I wouldn't be getting it. I don't like it so much here. Say it pops back up the next couple of days from here through 280. I don't like that price action just up at this overextended level. But anyway, that's just my views there, Lauren. But we'll see, mate. Either way, longer term, yeah, it's up. It's just this week, these couple of weeks here, this big washout probably threw a bit of a spanner in the works. The weekly's on the rise here. So that, see how the stochastics are starting to rise from oversold to, well, heading up to 50% or higher. That's a good sign that we could just be getting a bit of a deeper correction. It might happen on the daily, deeper correction. These stochastics roll over to 60, 40, 50%. Deep, a nice little breather taking on the price action, breather, and then start to lift again. And then that will work in nicely with that weekly chart. We'll show some good little, nice price action, but yeah, time will tell. What was the other one? ORG. Probably finish it up with this one there, guys. Dropping. So we're holding in there okay, I think. I think my internet just moving it around a bit is probably sort of the problem. Yeah, so ORG, flicking it to that weekly chart, we'll draw up this weekly chart. It's been rallying from 2016. So if we just go back to say 2016, because I think before that was obviously getting smashed, the price of crude, chopping around a bit. This bone probably works in nicely. Have I still got that chart up? No, that's the Aussie. Let's forget about it. With a rally up in crude of 65 to 75 bucks a barrel. So we can draw this up. This weekly trend is up. Okay. So we're seeing that's your price action there. It's holding nicely, holding a higher low here, popped up, higher lows, higher lows, higher lows, higher low. I better draw that straighter because this is the most recent higher low on the weekly chart. So that weekly, your anchor level, and you can see 1, 2 moves down before we started lifting. Prime little entry through here off this higher low, break, and that would probably 925. So that's the recent breakout zone. We'll draw it on a daily, but you can see this here 850 is your anchor to this most recent move up on your weekly. Okay, it's been up for a while. If the bears are right, this will roll over. If not, if the bulls are right and crude starts lifting again, we start getting another push up to what were we saying, $76 a barrel, another $10. It's basically a $10 rally. Or even if we overshoot that mark and then retrace some, overshoot the mark to $80 a barrel, you should start to see. You would expect to see Origin lift, and it's the weekly. All your zones, all your buying support levels, everything seems to be in place. It's really just going down to your daily and look to stochastics are sort of heading down to that oversold zone around 30% at the moment, holding up at a higher level at 925. Last time we're down there to oversold, it was down at around 850. So you can see that the buyers are starting to work their magic here. Go down to the daily. I'll make that a bit smaller. It's mainly that is high-low. I'll draw it up now. There you go. So that's your weekly anchor through here. You can see the market's lifted. Quite nice. We've gone through, you can see this leg up here. You can just break that down. Up, 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 pull back, broke the anchor. So you expect some sort of corrective action. As soon as you break that anchor for the most recent leg up, the shorter term, then you're going back to the longer term trends to see what's happening on the longer term. The longer term showing us a nice key support zone at 840. So you got to sit there and think, all right, shorter term on the daily, we're probably just broken. We might be in for a bit of sideways action, consolidation, or a bit of a pullback. What could be happening? Where's my levels on my longer term charts to try to work from, or to start to see it build? Let the price action play out. And what we've done is pull back here. We've lifted again and washed out the previous high, which is here. Actually, your previous high, we've come back into that high, washed it out again, and then we're starting to get a bit of a sell-off again. And what it's done, again, it goes back to that. If you can't get through the first or second time, probably second time or third time, a deeper correction may be in play. So that's probably what we've got, this good sell-off. And you can see it happen over a couple of days from the offer zone up at 1020, 1025, 1030, straight down to 940 to where the most recent high low was. Washed it out, and we started to lift again. So from here on that daily, I would love to see that level hold up, and then potentially market, because it looks like it's grinding up just as much as anything else. So it could just be grinding up. This could be the start again, a secondary move down, a deeper correction, and then find a bit of a bid zone here. Nothing's off the cards at the moment. But that's all going into play with the longer term weekly trend. We're getting a bit of sideways action, a bit of consolidation. We're probably not going to be looking at those highs anytime soon, just yet. We want to see something set up with the daily and the weekly when they're coming into agreement, as in the weekly's up. We know that. We're maybe just contracting, or we're getting a bit of sideways action on the weekly, but on the daily, we're getting some sort of corrective action. Wait to see that corrective action play out, start to lift again. You're getting your new leg where you're starting to get price action. If we do come, this is that leg down. We've come through that support. We're just starting to grind our way up a bit. Whether we come down and we start to find a bid off there again, and then we start holding some higher lows, that's when I'll be a bit more confident. A secondary test there, we're starting to lift again, buying a break off a higher low, assuming that we're going to at least touch up to 1020, or that longer term weekly trends start to come back into force. Buyers are starting to step in for a press up through those 1025 highs or 1030 highs, which is just here. Does that make sense there, guys? John, is it making sense? Hopefully it's making sense. So this is what I'm talking about to play out potentially now. I mean, we could just grind higher from here, just, up we go, up we go. Who knows? And trade straight back up to here. I probably wouldn't be on board in that case. I don't like this type of price action. This type of price action leads me to believe that it's not buying strength. When you get little minor high lows, high highs, it leads me to believe that, we're going to do this, and then boom, something happens. Bears are right on oil, and then straight down, and we just wipe out a few of these buyers. Because don't forget, this move up here, it's not convincing of strength, but it is fuel for potentially these guys who've been buying it up here to get squeezed out when the market turns, if it turns. That's why I don't mind seeing it push down. Don't mind seeing that once or twice and then come down, but fall short. I want to see the buyers step back in here and potentially start to show signs of buying pressure and starting to lift. Lifting off a double bottom is awesome. especially when you got the longer term weekly trend is up as well. So you're just looking to refine your entry from a weekly trend to see if it can push up. All right, might call it a day there, guys. Hopefully that helps. We're down 28 at the moment, starting to pick up a slight bit. ASX down 28. Yeah, it's not looking too bad. We'll see how that plays out. Which is the XJO. Let's just have a quick look at the intraday action. I'm in the 30-minute. Bit choppy. Very much choppy here, isn't it? You can see these washouts, washed it out, lifted. We've washed out these highs, rejected. So it's kind of choppy at the moment. I still expected that to continue for a little bit, but I think the longer term trend is up. Daily trend is pretty much sideways, but holding the uptrend at the moment. Maybe just consolidating those highs, and then we'll see if we can kick on. Anyway, guys, thank you very much for joining us. Be back in on Thursday at 12:30. So have a good couple of days, and we'll speak to you then. Cheers, guys. Bye.